Flint West reporting from the macro frontier on behalf of the Macro Intelligence Agency, MIA. From parity to panic, Bitcoin, gold, and the $5,000 signal. It all began with an observation, a quiet one, the kind that doesn't trend on social feeds or spike your adrenaline. Is Bitcoin trying to match the cumulative return of gold futures? Wait, is it aiming for parity with 1 kilogram of gold at each macro cycle top? We pulled up the charts. We ran the ratios. We cross-checked the tops. December 2017, BTC blows past gold's growth curve, then crashes. November 2021, Bitcoin hits price parity with 1 kilogram of gold, approximately 57,000 US dollars, then reverses sharply. May 2025, Bitcoin again finds itself nearly equal to 1 kilogram of gold, around $108,000, and appears to be topping again. This wasn't just noise. It was a recurring behavioral echo, a valuation tether, not in market cap terms, but in something deeper. Trust, monetary role, and perceived hardness. Where the data took us. Bitcoin maximalists are loud again. $250,000 per Bitcoin by year-end 2025 is the call. Maybe more. Fine, we said. Let's run it backwards. If Bitcoin equals $250,000 and the pattern of gold parity still holds, what does the gold price have to be? Answer: between $167,000 and $250,000 per kilogram, or $5,200 to $7,800 per ounce. Suddenly, this wasn't about Bitcoin anymore. It was about the entire monetary regime cracking open under the pressure of mispriced trust. Where we had to go next? So we triggered a field response, a full MIA tactical bulletin. We didn't sugarcoat it. We didn't dramatize it. We simply asked, what the hell is going on if gold hits $5,000 per ounce? And the report came in. Secure dispatch, Flint West. Agent, if you're reading this, it's because someone somewhere just flipped open a Bloomberg terminal and saw a $5,000 price tag stamped on a shiny yellow rock. Let me be clear. If gold hits $5,000 per ounce, we are no longer in markets. We are in monetary regime transition. This isn't just bullish, it's existential. Let's break down what the hell would have to be happening on this rock for that price to make sense, and what it tells us about the fiat order unraveling in real time. 1. Fiat credibility crisis. Gold at 5K means fiat has stopped working as a belief system. The global public, or worse, the sovereign class, is no longer willing to hold dollars, euros, yen, or yuan without hard asset collateral. This usually comes after years of abuse, QE, yield curve control, and most dangerously, weaponized monetary policy. See Russian FX reserves, Argentine defaults, Turkish currency swaps. Gold at 5K is a vote of no confidence in central banks' ability to defend purchasing power or restrain political spending. 2. Bond market no man's land. The bond vigilantes didn't come back. They were replaced by a mob. A 5K gold price is likely accompanied by persistent negative real yields. Either central banks are trapped at zero negative nominal rates, or inflation is unanchored and no one believes official CPI anymore. Treasury markets become dead men walking. Nominal growth is high, but nobody wants to lend. That's when hard assets front-run policy and gold becomes the scoreboard. 3. De-dollarization hits escape velocity. Gold doesn't go to 5K because you like it. It goes to 5K because your enemy hates the dollar. BRICS Plus expands, mBridge settles trade in real time, and major commodity flows bypass the USD settlement layer. Central banks start stockpiling gold not just for reserves, but as monetary ballast. If Saudi Arabia, China, India, and Brazil all start marking gold to market, you don't want to be last in line. Gold becomes the unit of account for sovereign trust. 4. CBDCs and capital controls begin. The only thing more terrifying than money printing is not being allowed to spend it. Governments may respond with programmable currencies to restrict capital flight. You'll hear terms like equitable consumption credits or inflation-adjusted basic units. Gold at 5K may not be tradable without reporting. In some jurisdictions, it may be confiscated or nationalized. This isn't speculation. It's happened before. 1933, 1971. It only takes one executive order. If gold's 5K, then trust is gone, the map is redrawn, and whatever you thought was money is now just a ledger entry on someone else's terms. Bitcoin may ride that wave too, but beware. In that world, only assets with no counterparty risk and strong self-custody survive. This isn't a call. This is a contingency map. We're not saying gold will hit $5,000. We're saying that if it does, we need to know what that really means. Not in price, but in system-wide trust. Bitcoin 250K isn't a price prediction anymore. It's a litmus test for what kind of world we'll be living in. End dispatch. Flint West. MIA. Signal over noise.